Swift collapse today of Silicon Valley Bank has left the tech and venture capital sector in turmoil tonight.
Federal authorities took over the bank's assets. KTVU's Jana Katsuyama joining us live tonight from the headquarters in Santa Clara, where there are plenty of nervous clients. Jana?
There are Alex and Christina. Silicon Valley Bank just basically didn't have enough cash to cover all of the withdrawals. And so that means now that there are many of their clients who are worried about how long they can go without being able to access their cash. The speed of Silicon Valley Bank's collapse came as a shock to many clients. Some rushed to the headquarters in Santa Clara Friday, only to find that California officials had shut it down. A sign from the FDIC stated it had taken control of the assets and would reopen Monday to distribute up to $250,000 to each insured client with a phone number for customers to call.
I'm trying to call it. It has been like a 4.5 hours already.
This entrepreneur, who didn't want his face or company's name on camera, said it's a concern for him and many other entrepreneurs now, wondering how they are going to make their payroll next Friday.
Maybe we need to cut the salary by like 30%, but I think I really don't want to lay off anyone.
You have so many other issues as a startup, and worrying about your bank should be the least of it, but and then this comes to the forefront. It's pretty scary.
Silicon Valley Bank had a solid reputation as a trusted bank for prominent venture capital funds and entrepreneurs, according to UC Berkeley professor Ross Levine.
Its assets grew threefold between 2020 and 2022. So that's an enormous increase, so that many firms, many startup firms in Silicon Valley were very confident in the bank and put lots of their money into it.
On Friday, Roku reported it has 26% of its cash, about $487 million, with SVB. The FDIC says SV Bank had about $209 billion in total assets at the close of 2022.
They were making sound investments. They were investing a lot in treasury securities and in mortgage-backed securities. Many of those assets were long-term. And what that meant is that when interest rates went up, the prices of the assets at SV Bank went down.
Starting Wednesday, nervous clients began making massive withdrawals.
The big loser is going to be the shareholders and some of the large, uninsured investors.
And small startups are worried whether they can hold out.
We are really hoping to have at least part of our money back to survive.
Silicon Valley Congressman Ro Khanna called on the White House and Treasury Department to help support the bank. And we had a statement from Congressman Eric Swalwell, who says, "I've heard from scores of constituents who have not received their paychecks because of this crisis, putting their mortgages and financial security at risk. My priority is ensuring accountability for any mismanagement at the bank or by investors." The professor Levine says that he does not think it's a good idea for the federal government to intervene too much in this and try and bail out the bank, because he said that that could incentivize other investors and other banks to not be as careful about the investments. But this is certainly something which is going to play out here on Monday when these doors reopen. Alex and Christina.
Yeah, it's certainly going to be a scene come Monday. Jana, what is the likelihood that the collapse of Silicon Valley Bank is going to threaten the broader financial system?
Well, right now, that is a big question, because it's not quite clear exactly how much of their assets will be able to cover the deposits. And one thing that the professor said that was hopeful is that, unlike 2008 with the collapse, a lot of the other banks are very stable. And so he doesn't see this as spreading, but certainly it is raising questions about those long-term investments. And other banks are probably looking at their balance sheets.
Yeah, but we know a lot of safeguards have been put in place since that time. Jana Katsuyama, live for us tonight in Santa Clara. Thank you so much, Jana.